The financial system is weak. It needs more and more debt in order to survive. There was a brief moment in history about a decade ago where the debt began to shrink. In this short period of time, there was a real fear of the global economic collapse. Ultimately, the world was saved by central banks buying every asset they could and posed as the saviors. Next time around, what's going to happen? You came here for the truth, so let me unveil that for you. Today we're going to look at the debt scenario. I want to talk mostly about consumer debt, and I will get into what Goldman Sachs has to say. Let's begin. Household debt, average U.S. household debt in specific categories. You can see this on the chart, whether it is credit cards, auto loans, student debt, and mortgages. It's very clear to me where most people have their debt. We have excessive amounts in mortgages, and I do believe for the average person, if you're living in the major metropolis areas, it's going to be a lot more than $182,000. But we're talking about averages here. We're talking about sampling that really doesn't give us the bigger picture, but we can use this information as we see fit. Now, student loans have been a big problem now for quite some time. We're talking about $1.5 trillion worth, and if the average person is carrying about $50,000 worth in student loans, at the same time they may have credit cards, they may have auto loans, and all this has piled up. They're not going to be able to pay it back the first year that they graduate out of college, should they be able to get a job right away. They're not going to be able to pay it back in the first year, maybe not the second year. That might have to wait a few years down the road if they ever pay it back. So this starts to compound, and the more debt that people are in, the more profit the banks get to make. And that's something that needs to be understood, that debt is profitable. Debt is then packaged up into these securitized little fancy investments, as they like to call them. They take these packages and they sell them off to investors as derivative products. So it's not your debt and they make a percentage on the interest. That's something so small these days. We are talking about securitized investments that they can make many multiples what you put in. All right, moving on. Looking at this out of Lending Tree. Consumer debt outlook from May 2018. I'll just cover a few points from it. Despite a recent pause in credit card balance increases, Americans are on pace to amass a collective $4 trillion in consumer debt by the end of 2018. That is excessive. I mean, we're looking at non-mortgage debt such as credit cards, personal loans, auto loans, and student debts. Excessive amounts today. Anywhere you look, it's expanding. Collectively, Americans owe more than 26% of their income on consumer debt. That's up from 22%. Unlike the previous decade, housing-related borrowing has barely budged, growing at a rate of about 2%, and so on. It goes in here to talk about their different issues with credit card delinquencies and so on. I want to move on and show you some charts, but first this. It's getting more expensive to borrow from banks in America, and some credit card holders are struggling to keep up. Interest rates, which influence the cost of borrowing, are on the rise, and the Fed has kept them near zero for years. That period of super low interest rates achieved one key outcome, encouraging Americans to borrow and spend and help grow the economy after the Great Recession. That's right. You should be saving, you should be paying down debt, but instead we're going to reduce interest rates and give you more of an incentive to ramp up that spending. Last June, credit card debt finally hit a new high, but the share of borrowers who make payments more than 30 days late is rising along with interest rates. So we are seeing that delinquency rates are rising, and it's not just in this factor. I've shown you this on the 60-day, the 90-day as well, that wherever you look, I mean, it could be the subprime auto loans, it could be anywhere, but delinquencies are definitely on the rise. And the areas in which they are not on the rise, I've shown you the charts before. Essentially what's happened here is they've been able to use the equity in their homes to pay off their things like credit cards and line of credits, and they simply are just filling them back up again. It's a trend that keeps on happening. But the average person doesn't know it. They don't see it. They only know how to get into more debt. You and I, we pay attention. That's the difference here. Okay, looking at these charts out of LendingTree, total consumer debt still on pace to eclipse $4 trillion this year. How in the world are they ever going to be able to get out of this level of debt? And the truth is that they're not. They won't. So you can see this here for yourself, how there was this, decline slightly. So the entire time it's rising and rising and rising. Then we get to this point here. In this period of time, the entire global financial system almost collapsed. And that's, it wouldn't even be considered a sharp decline. This is like a more of a slower, gradual over a few year period. And yet that was enough to start to have the entire world print money. All central banks printing money, buying up assets like crazy, and they still own them today. The Federal Reserve has barely scratched the surface on their tapering. Other central banks are still, every month, printing excessive amounts of money in the billions of dollars. Last I read the statistic, it was $200 billion per month. That may have declined by now, but ultimately it doesn't matter. It's excessive. Incomes are growing. I don't believe that. But consumer borrowing is growing faster. That's the way it works. In real terms, we're always losing out. And these people here, unfortunately, are getting into way too much debt. There are certain situations where I understand that, hey, emergencies happen and things happen out of your control. It happened once, but you need to get out of that situation. It might take you 6 months, it might take you a year, but you have to get out of it. You have to do what you can. That means if you got to work 2 jobs, if you got to sell things in your house, if you have to be able to, do things on the side, have a little side gig, be able to do services for people. People can, there's 100 different things you can do, but you have to get out of debt. It's very important. Because debt is the system of control set up by these bankers, and they love it when you're in debt. Since 2013, Americans have been accumulating more debt. Overall, the percentage of total non-housing debt at 26% of disposable personal income is now higher than during the credit boom in the mid-2000s. So this number has surely increased throughout this time frame over, throughout the 90s and so on. And this number does move up and down, that's for sure. But it is at a record high and not in a good way at all. I mean, you want to be able to have people spending money. That's for sure. You don't want everybody to have all of their money in the bank and never buy anything. There is some need for that velocity of money, that's for sure. But the rate at which it needs to be accumulated and moved is ridiculous these days. Very quickly here, looking at retail, brick and mortar, looking at the online systems that we have today, platforms. Brick and mortar retail share of the overall employment has been declining somewhat. I mean, this chart here, you need to understand that the bottom of the chart's 10% and the top is 12%. So it's not that significant. We're zoomed in here. But the trend is very clear that over the years, since, let's say 1990 and so on, it's been moving down. More people are moving out of this brick and mortar and into the online systems and into warehousing, and I'll show you that here. Gains in e-commerce help offset the losses. Change in employment since 2007. Look, warehouses like this is moving up. You could see that the non-store retailers are moving up, but department stores are definitely on a decline. If this was me and I was looking at the trends, I don't invest in paper assets, but if I want to invest in a trend like Amazon, I would also at the same time be shorting department stores. It just seems most logical to me. So the warehousing is interesting because you can see that, as the example there, Amazon warehouse, that is growing. You have more people working in there, whether it's, any form of logistics or the shipping or anything that I think is all interconnected with that, it's important, where you have less people going to be working in sort of this retail brick and mortar locations. Okay, so very last thing that I want to mention here, Goldman Sachs. Everybody loves them. Well, the fiscal outlook for the US is, quote, not good. Well, this individual at Goldman Sachs sees the deficit ballooning to $2 trillion by 2028. Lawmakers might hesitate to approve fiscal stimulus in the next downturn in light of the already substantial budget deficit. And it is true that they may do this, but if so, it's on purpose because they want the system to decline and they want people to beg. And when we get low enough, they're going to say, okay, no worries, we're going to buy up everything. And they will buy everything, but the truth is that they're going to buy it for pennies on the dollar. Genius. And they do it every time, and people literally beg for it to happen. You could look at people today who are investing in the stock market that know what the central banks are doing, that know what the Fed is doing. And they say, keep printing. I own 7 shares of Amazon, and I really need these to continue to increase because I'm going to be able to buy a mansion one day with these 7 shares as long as the central bank keeps printing money. Now that's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel, so I do appreciate that very much. Last but not least, if you found the video informative, I know that you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You could actually flip through these books. All you need to do is go over to Amazon and look in the links below in the description. You can go over there to Amazon where they have a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.